The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the show today, folks. We want to take a few seconds here to take a look at the DAX index and also the FTSE like we usually do. As you can see, they're really not doing much compared to what we did yesterday, but that's because it's a different country and they have different rules and different tools. If we take a look over here at the FTSE, you'll notice here that we had a rally yesterday, went a little above the 78% level and then sold off a bit, but it's certainly acting differently than what we're seeing here in the United States. Now, our guest today at the half-hour break is going to be Dale Pinkert, an old friend from Forex Stop Hunter. He'll be on to talk to us about the currencies, and we've got a lot to talk about there because the euro's down at the 78% level, down at that 117.70 level that it hit just a little while ago, so that's going to be very interesting. But I wanted to share some information with you from our good friend Rich Anderson of Anderson Capital Management. If you remember, Rich was on last week and we were talking about the corn and beans and wheat and everything else, and we want to bring this chart up here because Rich follows a lot of different things, and one of the things that he follows is a gentleman follows this thing called the Golden Cross, where the 100-day moving average crosses over the 200-day moving average. You can see we've done that in the July corn. You can see the July corn, it completed that butterfly pattern up there at the top. Then it's pulled back and made a higher bottom in here. But the one that we're watching closest of all is the nearby corn is July, but we want to look at the one that is the new crop, which is the December corn. So if you'll give me 1 second here, hopefully I'll get this up. Here's the Christmas corn. There we go. Bring this up here. We'll take a quick look at it here. You'll notice we're seeing that same thing happening with that golden cross, but we have a 135 pattern coming in from a higher level. That's where we have higher tops and higher bottoms, so we're certainly in an uptrend, and we're pulling back to that level, very, very closely. So pay close attention to that one, and especially since we're right over this new moon that we had yesterday, which is, I think, something that we should always be watching, but it's particular at this particular time, because if we take a look at the December wheat, which is Christmas wheat, you'll notice that we're making this beautiful 135 pattern right at the 78% level of the low from April 23rd, and it's also the 61% retracement from the low on May 26th. So this is an excellent pattern. It was first brought to my attention by Roy Longstreet and his son Bill, and I wrote about it in my book Astro Cycles: A Trader's Viewpoint many years ago. But what we did was we put these ratios in to help give a quantitative spot to where you should be a buyer, and it hit there last night, almost perfect yesterday, in the December wheat. So keep an eye on this one. This has got a chance to have a pretty good rally, because you're certainly still in an uptrend. You've had 1, 2, 3, 4, 5 higher bottoms now since December, so it's still in a down uptrend in the wheat market. So let's watch December wheat today, because it looks like it could be a very interesting move here. Another one that looks very interesting, folks, we've been talking about this number of 1285 in the gold. We hit 1285 today, folks. This is going to be really interesting. I wrote a special report this past weekend on the precious metals, expecting something like this could possibly happen, and it certainly did. I'll just try to review what we were watching here, because this was the real key here, to my opinion, and believe me, this is just my opinion, but this is what we focused on in this special report last week on Monday, and that is that we had this 4-hour chart in the gold market that took us back at least several months, and as you can see, we had a beautiful ABCD pattern completing here on the 11th, last Thursday, and that told us that if that 382 was correct, we were going to drop below 1302 very, very quickly and go down and complete the pattern that you're looking at. So pay attention to that. Now, if you want to really get technical, if you take the high at 1369 and the low that we took at 1302, you subtract the difference, that's $67. And if you track $67 from the high that we made on Friday, the last Thursday, 1326, you subtract 60, that's going to take you to 1279. So keep an eye on that number. So far, our low today has been 1285.70. The 61% retracement of that whole move from way back in December comes in at 1285.80, I believe, and our low today has been 1286.80, and our low today has been 1285.70. So kind of keep an eye on that one. That would be one that would be, very, very interesting, certainly to pay very, very close attention to. That would be, I think, very, very important. Now, one other thing that we have that we're looking at here is the one of the, when I do teach people, I've been really fortunate enough to stay in contact with almost all of them. I think over 75% of the people that I've trained that are still trading or still on this planet over the past 38 years, I'm still in contact with. And this is from one of our friends over in Hong Kong. I wanted to bring this up to bring it to your attention here. This is the gold chart. And what he's looking at here is a daily chart, and you're looking at these 111-day trading lows. Now, remember, that was the same type of low that Stan Harley uses. So sometime in this time frame, we're going to be seeing a pretty good bottom here in the gold. There's one other key factor that we're looking at, and I'm going to focus on it in my newsletter again this week because it's been a good indicator of these markets getting ready to turn. It's what it alerted us to the fact that we had one more down move in the gold coming in this week, and whether that's going to be continuing on, we'll have to wait and see. An interesting phenomenon here, folks. Even with the big drop that we've had in the gold and in the platinum, silver is still not taking out the April lows. That to me is very, very positive for the silver market. That is extremely positive. I expected silver to be trading around $15.80 per ounce at these levels, and we're a good 45 cents above that. So that's a very, very interesting, thing to be watching. Now, someone's asked me the question regarding the E-mini S&P. Folks, we had that big ABCD pattern finishing up there. I'll pull this up to take a look at it. We didn't break very much. We haven't even broken to a 382 as of yet, but we did get up to that level, completed that big ABCD pattern. We got down to 26 and change, I think, yesterday, just a little bit below that. So the fact that it came down quickly off of that new moon on those patterns coming together that we saw in the Dow Jones, and especially that NASDAQ and the IWM, that would tell us that we're probably in some type of a correction into this area of where we are right now. But this is just the first day after the new moon, so I don't expect anything as bad as we had yesterday. But even yesterday wasn't very bad. The Dow was down 200 and some points, which is nothing considering it goes up that fast. So let's take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we want to talk just a little bit about interest rates because they affect everything. But if we take a look at this 4-hour chart in the 30-year Treasury bond, you'll notice here that we had what we thought was possibly strong support there at the 1.27 expansion and 78.6% retracement at 142.06. The key figure there, folks, is look what happened exactly at that spot. I mean, it just literally gave up the ghost and, quickly broke well over a handle very, very quickly. Now, the important thing about that figure is that you don't have to risk very much money when you're at these really key levels where you have several ratios coming together. There's really you're at the moment of truth, so to speak, because you don't have to risk very much, because if it goes through those numbers, it's going to be pulled like a magnet down into the next set of numbers, and the next one down there, of course, you can see comes in at this 1.27 expansion at 140.28, which we've hit. We bounced a little bit since that time. We're up to about that 141.25 level again, but this market has a tremendous bearish bias to us that we've been saying for quite some time, and we still think we've got a lot farther to go. This is the first time in a long time that the 10-year notes have been above the coveted 3% level, and I certainly think that does mean a great deal. Remember, on the long-term view of these, they look incredibly bearish, and we've shown this many times in the past, and we certainly don't want to change our tune right now because it looks like it's certainly got a lot more to go to the downside. The $64 question that people have asked me here in the last 24 hours is whether we hit a significant top in the market yesterday. There is a possibility of that. We were talking about this on Monday because of the fact that we had this pattern coming in here on the NASDAQ, which was a head and shoulders pattern. We hit the exact 78% level up there at 70.10, and we backed off from that level. We got down as low as 68.60, I believe, last night, which isn't very much. It doesn't even take out the lows of last week yet, but that is a head and shoulders pattern because the right shoulder is below the left shoulder. You'd like to have perfect symmetry, but the symmetry between the shoulder and the high on the left side is 1.27 to the right side. So that's pretty close. And if you look at that 1.27 expansion that we had from the BC swing, which was from April the 20th down into April the 28th, that also was a 1.27 expansion. Now, here was a case where the market reacted, quickly in your favor if you were short. Remember, in the Treasury bonds, if you'd have bought that, you would have been out of it immediately because it just basically collapsed. You don't want to risk more than a couple $100 when you're trading, 30-year Treasury bonds, because that's, if they work that good, if they don't hit those exact numbers and don't go through, there's something wrong, and you just don't want to stand in front of it. That's what trading is all about, is to try to figure out, how much you're going to risk and correct it as quickly as possible. At least that's my opinion of it. Whether that's right or not, I don't know, but I've been doing this a long time, and it certainly, gives you a spot to think whether you're going to be looking at it. Now, here's where we were as of yesterday, I believe. I just hope this is up to date. I believe that it is. This is there's the E-mini S&P. We got just a tad below the 2,700 level. It didn't really do very much at all, but we did get up. We finished that big ABCD pattern that I posted there. The important thing on this is also that was a 1.618 expansion of the move from April 27th down into May 4th. That was very, very important. So if this is going to be the case, the next really strong support comes in at around the 2685 level. That is the 382 retracement of that low. And if we hold that and then turn, we've got a pretty good chance of moving to the upside. Now, whether that's going to happen or not, I don't know. I've been asked a question about Elliott wave, and I don't do Elliott wave counting like almost everyone else. But if you will pay attention to the Elliott wave letter when it comes out, I believe there's an Elliott wave letter that came out, but I don't know whether he's bullish or bearish. No one's told me that as yet, but I believe he's put something in there, about the gold market. I sent a special report out this weekend about the gold and precious metals, talking about this bottom that should be coming in this week. And by this week, I guess he's bearish on stocks. Okay, and but anyway, this special report that I sent out over the weekend was alerting us to the fact that we could get right down into this level here, where everybody is going to be really bearish now that gold has taken out that major support. But boy, folks, it is finishing this 61% retracement just spot on, and it looks really interesting. We've got one other little tiny thing to put the key in place, and I'm going to do that over the weekend, and then we're going to see how we're going to come out of here. But this is my 2 cents worth, and I'm just going to give it to you right here. I really think that this is we're going to see a move coming out of here in gold that's going to scare the bejeebies off of people. Now, this is my opinion, and believe me, nothing in these markets gets you in more trouble than your darned opinion. But I have an opinion, and sometimes those opinions work, and sometimes they don't. So just remember that it is an opinion, and everybody has one, and we all know what that means. So just remind yourself that it's all about risk control. But if it does start to turn, keep in mind that there is, you're right, David, when there's blood in the streets, that's when you want to start looking at it. And I don't even think we're seeing that in the gold market, because it's a relative, yesterday was down $26, but we've seen that before. But the fact that it's stopped here at the 1285 level, at least for the time being, maybe it'd have a cup of coffee, I don't know, but that's a good sign. And we've got one other factor that I'm waiting for, and I won't have that answer for a couple more days. And if that one comes in, then I'm going to say, this is it. This is where we take the gloves off and see. Now, we were long gold coming into last Friday, and I said in that special report that if gold was down on Monday, there was a really strong probability that we were going to take out that 1302 and head down to this 1285, which so far we've done. Now, if we close badly below 1285 today, that will certainly give another perspective. That's why we've got to wait here to see if we're going to re-enter this gold market, when we think the bottom is coming in. And, bottoms are a little bit easier to pick than tops, because tops are based on fear, and tops are based on greed, and bottoms are based on fear, and fear is easier emotion, an easier emotion to figure because it has physical characteristics. Okay, yeah, that's just, yes, that was my grandma. She told me that about coffee, cocoa, and orange juice. Whenever you have the urge to trade those, go lay down on the couch till the urge grows away. That's the same truth about opinions, Z. You're absolutely right. I should have been quiet and not mentioned it, but when you're doing a radio show, sometimes you throw all caution to your wind. What's that story? It says it's better to keep your mouth quiet and remain a fool than to open your mouth and remove all doubt. I think that's just what I did. But anyway, that's my opinion, and I'm sticking to it. So we'll see what happens. But you know, when you have an opinion, what happens is you're leaning in one direction is what you're doing. And if you got a lead and it's working, that's great. But if you don't, you're going to fall down. So you got to be able to pick yourself up. That's what stops are for. Stay tuned for Dale Pinkert of Forex Stop Hunter. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We've got our good friend Dale Pinkert from Forex Analytics and Forex Stop Hunter on the line. Dale, are you there?
I am, Larry. Great to talk to you again. Thanks for inviting me back after calling the top in the S&P.
Well, that's for sure. We have to do that once in our lifetime. I'm waiting for my time.
That was the last time. That was the only time, Larry. Go ahead.
Okay. First of all, we got your first chart up. I believe it's the XAU on gold. Is that correct?
Okay, I have quite a few here. Is that
Yeah.
where you want to start?
Yeah, let's
Okay,
start with that one, please. Yeah.
okay, so gold kind of took away my thunder, Larry. I was hoping it was going to hold 1300 before this interview. I was looking for a washout under that support level. Gold shares haven't been acting great, but they started to act a little better here. I had a 1285 target based on a weekly bid level, about 61.8 back from the rally that started under 1240 to the high at 1360. But I need a candle with chutzpah before I go in there. So people say, Dale, well, is that your target? What do you do? I say, well, if you want to own it, you only put a toe in the water. You go very small, because right now I don't have the RSI structure to get aggressive. And I also think there's one more low coming in silver. So I'm going to be pegging gold buy when I see silver back under 16, maybe 1570, 1560.
That makes good sense to me. They certainly took it apart yesterday, down $26, and that was a big move down in the gold. But that 1285, like you mentioned, that's a big 618 number down in that area,
Right.
and it's certainly trying to hold.
So it's interesting, Larry. Last time I was on, I'd been short the dollar, and I was looking for 88.50, and you congratulated me on that one. And I said that, just because something reaches a target does not necessarily mean that you reverse there. And you know what? That was the bottom. And I didn't reverse there because I was looking for one more jiggle to the downside, maybe 87 or so. But then once we start getting over 92, the whole complexion of the dollar changed, and that was one I was late on. So I still think the dollar now is getting overdone. We're due for a pullback, but had a great guest on today, and some other people I talked to think that before this dollar rally terminates, it will be up around 97. So that means that the dollar still has legs, which means most likely some more pressure on gold that could take it down. I mean, a standard technician would look at the range here, Larry, and say, well, we had a range between 1300, 1360. That would measure 1240, right?
No,
So,
hey, if it can make $26 in one day, it's not very far between 1285 and 1240. It's just pretty much the same distance, And if you're talking about a dollar index at 97, you're going to be looking at a euro going to be around 115, 114 in the euro. That's two and a half large handles from where we are right now. So that's the case for make sure you use a stop on some of these, because they can really move, especially when the markets get very, very active.
Yeah, and you know what, Larry? At that point, the euro would be a great buy. It's probably halfway back from the move from 103 to 125 at those levels. So, this to me is counter trend, even though it's dramatic. This dollar rally, I think structurally the dollar is still in a bear market, and I'm awaiting that turn to be long the world. Once the dollar turns, every commodity market should be doing quite well.
I could certainly believe that. Now, the next chart we're looking at here is the NASDAQ. I don't know if you're aware of this or not, Dale, but
it's a Gartley here.
Yeah, well, it is a Gartley, but you know that that Mr. Prechter, Bob Prechter from the Elliott Wave Theorists, put out a special letter, I guess, today saying that he thought this was an interesting spot here for the stock market to go down. But you want to continue on with what you're looking at here on your Forex or your NASDAQ chart, please?
Yeah, so it is a Gartley, and what's interesting is the relative strength in the market, Larry, has been the Russell, ticking up against new highs, and then the NASDAQ, but the S&Ps could pull back sharply here, and the NASDAQ follow, but I'm going to stick with my longer-term scenario that NASDAQ will not break down and will make new all-time highs. I have targets up around 7,300. For me, that's one of the patterns I trade. I'd learned from J.R. Hill. Nothing I do is original. Okay, I've learned from people in the past. I've learned from you. I've learned from J.R. Hill. So I think 7,300 is possible before the bigger break in NASDAQ, and Ellioticians would probably call that an ending diagonal. So some weakness here, but I don't think it's over unless we break down under, say, 6,600.
No, that would be one heck of a drop below that in that area for sure. Now, Dale, the question that I ask you, how much of a factor do you use Elliott wave in your analysis? Do you do the Elliott wave counting like most people do?
No, I rely upon Grega Horvat, and who's part of our team here at Forex Analytics. You know, I'm a jack of all trades, sorry about the pun, and a master of only one. RSI, RSI, and 3 drive formations and trading psychology. So, you know, Larry, I'm a big believer in intelligence gathering. When I was a young guy, when you and I were on the floor at the Merc, I would only want to know what other people were thinking so I could fade them. But there's a great, you know, big egos back then, buddy. You know, we've been humbled a few times. So there's a great advantage in knowing that there are people that have outstanding talent and insights and work, and to include them in your intelligence gathering. So Greg is one guy I do it with.
Okay, another question one of our listeners is asking is, are you looking at volume at all on this rally? Because they're saying that the amount of volume on the upside here in the stock market has been rather weak compared to other rallies. Do you follow that at all?
Yes, you know, volume precedes price, and perhaps that's why the market is vulnerable here. I know some people think that we could get another shot down in the S&Ps down towards 2,600 before attempting another rally. I just look at this picture on the NASDAQ to me here, and it looks incomplete. And so, you know, I think that we could rally on light volume to take the NASDAQ up towards that objective at 7,300 or so. And I'm going to be patient. And you know what? If the market breaks down from here, I'll look for another entry. And like W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. And you know what, Larry? If I miss it, so what? There's always another bust around the corner.
I remember Paul Tudor Jones, lose your opinion instead of your money. And boy, there's a certain truth to that. Dale, we're going to have we're going to have to, and he certainly has been very successful. We're going to have to pay a few bills here, but after we get back, I'd like to go over a couple of these Forex markets with you, if you don't mind, because I know that's one of the things that you specialize in. So maybe when we get back from the break, we could talk a little bit, you know, about the foreign exchange markets that we're looking at. In fact, I think you want to talk a little bit about the renminbi, the Chinese yuan. Is that correct?
I do.
Good. Well, we'll do that when we get. Yeah, that's great. We'll be back, and we'll also cover the euro and maybe the Australian dollar, because people have asked both questions about that, and I can post the charts for that as we speak. But right after this break, we'll be back with Dale Pinkert of Forex Analytics, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Dale Pinkert, Forex Analytics, and we're talking about the Chinese yuan, the renminbi. You want to go ahead and talk to us about that? Before you do that, Dale, how much trading do you guys do in the renminbi? Is it getting pretty active now?
I use it more as a guideline. In fact, you probably know who Chris Carolyn is, Larry? Spiral Calendar.
Oh, sure, absolutely. Yes, I know Chris a long time, yeah.
So, I like to give credit when I learn something from somebody else. So I was talking to Chris, and he was talking about how the correlation between the yuan and the gold was becoming very tight. I mean, everyone knows that U.S. dollar yen and gold can move inversely. And, the yen has been strong, U.S. dollar yen yen's been weak, U.S. dollar yen strong. So Chris has been talking about this. So if you believe that correlation, we're not making new lows in the yuan here with the gold getting taken out. I still think, although there's this line to the upside, that there's another drive down to the bottom. I'm looking for some cycle lows in mid-June. There's a lot of things happening in mid-June, Larry. If we have the meeting between Trump and Kim, that's happening there. I have some cycles due here, and then we have the solstice. So I'm looking for a lot of things to come together in mid-June. Maybe that'll be the new high in the NASDAQ, and maybe that'll be the peak in the dollar. And I'm looking for one more low in the yuan into that time frame, and then I'd watch that correlation. When the yuan bottoms, that's going to be kind of a green light, will be a green light, according to Chris Carolyn.
That makes pretty good sense. I'd like to ask a question here. I'm going to post a chart here that I've had on the euro quite some time now. We have a 78% level down here at this 117.60 level, and we hit that this morning. And we've had a little 30 pip rally, just bouncing a little bit. But your opinion is that we're heading down much lower in the euro. Is that correct?
Well, I'm starting to get some non-confirmations on the 4-hour here. That's recent little low here. But, we could get a rally back to 118. I actually had a return line on the euro up above, right at 120, which came in Monday. And the key number to watch in the dollar line in the sand for the bull case for me now is 92 to 92.20. So as long as we're holding 92.20 and the euro's under 120, the bull case continues in the dollar. Should we take out 92 and the euro trade above 120, then the trend is changing. But you're right, we're way overdue for some type of bounce, and if you pull up your Dixie chart, you'll see that we have two drives to a top. So
Sure.
I am looking for a correction in the dollar. I don't think it's going to be the end of the dollar rally, but a breather.
Okay, the other one I want to take a look quick gander at here is the Canadian dollar versus the U.S. dollar, because we've been pretty fortunate in this one, and this has certainly been in a really strong trend. Do you have a feeling here on the Canadian, and is it related to the oil market at all? Because oil has held up incredibly well here, given all the stuff that's going on.
Well, when we had our last interview, I was bearish. Crude was 65, and I said I thought we could go to 55, but I was worried about the Middle East. And now we're approaching what I think is going to be a sticking point up around 75. But Canada looks to me like we could pull back towards a 127 level, and I'd be a buyer down there.
That makes pretty good sense. Now, if you had to put your last quarter, and we never want to do that in our business, but if you had a quarter to put down on something, what do you think would be the best trade coming up in the next 2 weeks?
I would probably look at something counter trend, a short in the dollar. I have a major weekly trend line coming in up around 93.70 to 94, looking for a pullback there.
Okay.
Currently you have DSI. You have like 10% bulls in the dollar, 90% bulls in the dollar, 10% bulls in the euro and the metals. So I'd look for something counter trend for a few weeks.
Okay, we've got another question from one of our listeners across the pond, and that is on the British pound. What's your feeling here on the British pound?
Actually, the pound has a better RSI structure. I'd be looking for some type of bear market rally along with the dollar coming off. We've had a big break from 44 to almost 34, so why can't we rally back to 38?
Oh, certainly, without any trouble. We could do that without any trouble at all, for sure. Dale, listen, I want to thank you for having you on the show today. We're going to have you on again soon, but you always got some great information. How would the people reach you, Dale, if they wanted to get some more information?
Well, they could follow me on Twitter at Forex Stop Hunter, and I invite all your listeners, viewers, to join us in FACE, which is our free 1-hour webinar every morning from 8 a.m. to 9 a.m. Just go to forexanalytics.com and register, and they could see us in action every day.
Okay, that's great. Thanks for having you on, Dale, or for being on the show. I really appreciate it. Dale Pinker, Forex Analytics. Have a good day, everybody. Thanks a lot.
Thank you, Larry. Take it easy. Good hunting, everyone. Bye-bye.
Okay. All right, folks, we're going to take a quick look at these markets here. We're getting some good strength. We're approaching the 38% retracement here in the NASDAQ up here around this 69.15 level, which will be an interesting spot to take a look at. And the rest of the markets are actually retaining some of this or regaining some of the losses yesterday. But that was a pretty big move down yesterday. And for the market to reverse in one day, we've seen it happen more than one time. So it's certainly possible of doing that. The gold has rallied from 1286 up to 1290. Doesn't really mean very much. The euros rallied about 40 pips off the bottom, off of that 78% level, but that hasn't done much. Hasn't done much either. So it's still a little bit early in the morning, as we look at some of these things unfolding. But this early part of the morning, of course, is known as amateur hour. But we'll certainly keep a close eye on it as we watch some of these things unfold through the day here. I think we had the pound dollar chart is still up because they haven't had a chance to post anything else. So if you'll give me a second, I will be happy to post this dollar index because it's a day behind, of course. Actually, it's 2 days behind, but if you give me a second here, I will bring up this dollar index because we've gone back above that old high at 93.30, and that should take us easily up to that 78% level at around the 93.60 level that we should have hit this morning, because with the euro hitting the 78.6 on the downside, the dollar index should have hit the 78% level on the upside. So that's a very key level, to pay very, very close attention to. So watch that. It's something that is very, very important. So there you go. Thank you very much for for posting that for me. 93.52 has been that area, and 93.60 is the exact 78% level. So that's why it looks like it could be, a very, very interesting spot to pay attention to. So the early morning, of course, is our wildest times of the day, and we'll see how these things unfold as we continue throughout the rest of the morning here. But we've rallied well over 100 points just in the Dow Jones here in the first few minutes, and we've rallied about 30 handles in the Nasdaq. So we're having a pretty good rally so far this morning. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to mention here that we're having some extremely hot weather across the east. Atlanta hit 92, St. Louis hit 95. I mean, these are really high temperatures for May 15th and 16th. So if we are starting to see some signs of hot weather coming in, it might move into the Midwest during the growing season and, give a boost to some of these things. The soybean complex still was under pressure yesterday along with everything else, but the soybean oil was holding up relatively well compared to that group. But they still look very, very bullish. And as we said, the chart that we started with the chart that we had with Rich Anderson on this December corn. That looks like a very interesting picture when you consider that we've got a pretty good spot here, to look at a buy here in corn just slightly lower in an uptrend. You're buying, a retracement in an uptrend. That's really what we're looking at. How much of a correction? If we gain back more than 200 points in the Dow today, that would mean that yesterday was probably a good buying opportunity. But the more important thing is that if we go below the low that we made yesterday, that would be extremely bearish, especially after a quick 150-point rally early this morning. That would be nothing more than a short covering rally, and that would precipitate, the market probably getting ready, to go lower. Whether that'll happen or not, I'm not really sure. So we'll keep an eye on those. But the key thing today is the fact that gold hit 1285. That was right at the 61% retracement. We're trading at 1290 right now. I don't think you have to be a hero here and try to buy 1285, but I think you're going to get a better chance here to find out if this is going to be turning or not in the gold. But it's got it. The only thing we haven't had happen yet is to see silver down below $15 an ounce. If silver were at 15.10, I would just flat out say buy all the precious metals, but it hasn't done that. It's still acting relatively strong. Platinum is very low. So we'll see you all in the flip-flop tomorrow. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!